After World War II, it was clear the world needed a new financial system. The gold standard was considered too rigid, but at the same time, economists were worried that countries would devalue their currency to boost exports. For this reason, 44 countries sent delegates to a conference held in Bretton Woods, New Hampshire, as of the 1st of July 1944. The U.S., which held two-thirds of the world's gold reserves after the war, was obviously the most influential player, and ultimately, all currencies ended up linked to the dollar, and the dollar was linked to gold. One important concern arose, though. If a country goes through an economic crisis, how can it get out of it without devaluing its currency? To address this issue, two institutions were created. One, the International Monetary Fund, which was supposed to lend money to countries that are in trouble and cannot attract financing from other sources. Two, the International Bank for Reconstruction and Development, which is now called the World Bank and was supposed to help less developed countries grow. Unfortunately, as good as it may have sounded on paper, the Bretton Woods system didn't survive because the United States kept running deficits to fund various projects, and therefore, the amount of dollars in existence kept increasing while the gold reserves of the U.S. kept shrinking, as more countries demanded gold in exchange for their dollars. As such, on the 15th of August 1971, Nixon officially announced that dollars would no longer be convertible to gold, thereby putting the final nail in the coffin of the Bretton Woods system.
This Sunday, August 15th, will be the 50th anniversary of the end of the Bretton Woods currency system. And just to remind viewers, after World War II, major nations essentially agreed to peg their currencies to a gold-backed dollar. But by 1971, faith in the U.S. dollar was eroding, forcing then President Richard Nixon to, in that scary photo there, to end the dollar's convertibility to gold. This ushered in the current status quo of relatively free-floating fiat currencies. And we have David Morris writing that article we see there. And that's just a teaser on CoinDesk.com. Coming up, he's going to have a 3,000-word article on the viability of various currencies as central bank reserves, including the euro, the Japanese yen, the Chinese yuan, as well as Bitcoin. But interesting reflecting upon this anniversary, Brad, in terms of as we enter a era of digital finance, how do you feel this new oncoming wave of finance reflecting upon Bretton Woods all coming together?
Well, first I'll say I'll have to carve out a couple hours to read those 3,000 words from David Morris. Bretton Woods was the agreement coming out of World War II when all the European countries were heavy in debt, and the U.S. was just becoming kind of top dog in the world. They agreed on the dollar to be the monetary standard. It would be backed by gold. And then, because of pressures, on U.S. finances, Nixon was forced to take us off of that gold standard. And since then, the dollar they say the dollar is backed by the full faith and credit of the United States government. But really, that doesn't mean anything. It just means, if you try to tender a dollar to the U.S. government, all they'll really give you is another dollar. Our director, our executive editor, Mark Hochstein, talks about how crypto may not have all the right answers, but it's asking the right questions. And this is just, one of, many questions raised by the emergence of cryptocurrencies, which is, what is the dollar worth? Bitcoin is up 60% against the dollar this year. Put another way, the dollar is down a lot versus Bitcoin this year. So people say Bitcoin's not backed by anything, but on the other hand, it's outperforming the dollar in global financial markets. But yeah, anniversaries like this are always a good time to sort of sit back and think about how the system is set up.
Christy, Bitcoin, the next reserve currency of the world. I've asked this question of a couple of people. I did get a yes from Anthony Scaramucci from Skybridge Capital, who also infamously lasted 11 days in the Trump administration.
What I really love is the fact that right now, here we are, 12 years out, and we're already talking about this as a potential. But that's what I love right now about where we are in Bitcoin, is the potential for it to be so many different things, and we're still feeling it out. It's still early, and as Mark and as Brad mentioned with Mark Hochstein, that we're asking all the right questions. And one of the things regarding the reserve currency that David Morris points out is the interest in the idea of Bitcoin as a potential reserve currency has exploded since El Salvador first dipped its toes in. And he suggests that the interest in it as a reserve currency is going to be pushed up from countries with weaker currencies like Argentina, and countries that are looking for alternatives and are open to the idea of, well, what we have isn't working, let's try this. Do we want to be beholden to a superpower's currency that we have to just cross our fingers on, or can we try something different? So that's where he suggests to look for the next major wave of Bitcoin adoption: smaller nations with troubled currencies or histories of monetary mismanagement. And I think that the potential there is, they say, oh, it's never going to be used for this, that, and the other thing. Oh, it won't be used until, well, we're going to have countries using it. And once you have that established, it's a really good way of sort of almost like there being the test net for the world reserve currency.
Market capitalization is a useful metric to learn the monetary value of cryptocurrency. A coin's market cap is calculated by multiplying the total circulating supply of the coin by its price. Let's look at a quick example. If we published a BlockGeeks coin, and there were 300,000 of them worth $2 each, the BlockGeeks coin would have a market cap of $600,000. But now we're bored of this coin, and we release BlockGeeks Coin 2. There are only 50,000 of these coins, but they're worth $4 each, for a total market cap of $200,000. Therefore, even though BlockGeeks Coin 2 is worth twice as much as the original BlockGeeks coin, its market cap is lower. This illustrates why market cap is a better way to gauge the influence and growth of a coin than price alone. If I have one coin worth $1 million, that doesn't leave much room for growth, nor does it have much utility as a currency. But a large community trading and interacting with 500 million coins worth 1 cent each has the groundwork for something special. Even if my $1 million coin is worth more individually, the network of the lower priced coin is more valuable. One of the key takeaways here is the risk versus reward factor. Typically, large market cap assets have less room to grow than low market cap ones. Similarly, the large market cap assets will fall less than small ones. In other words, volatility can often be tied to the size of an asset's market cap. Most times, you stand to gain more by investing in a small cap asset, but you also stand to lose more. This is where the well talked about concept of diversification comes from. A share of money can be placed into larger capped, less volatile assets, while a share of riskier money can be put towards small cap, volatile assets. This allows for the possibility of gaining from some of the explosive growth that small cap assets can be prone to, while sheltering a portion of your investment in the less volatile large cap assets. But market cap doesn't quite tell the story, even if it can be illustrative. One big problem with market cap in cryptocurrency is that many coins can be locked away, effectively out of use entirely. We can look at a real-world example of this in the number one cryptocurrency, Bitcoin. According to Fortune, anywhere from 17 to 23% of Bitcoins may already be lost forever. If you're looking to learn more, we have a link to the article in the description. So you can see how this would adversely affect the reliability of a coin's market cap. An asset could look like it's a safe, large cap asset, when in reality, much of that cap is locked away or lost forever. This is why it's important to always do your own research, and to never base investments on raw numbers presented to you. So now you know what market cap is.
Examples of specific blockchains like Ripple and R3's Corda. The question is if we have direct contact with these organisations at the moment.
Well, look, we've got a business development agenda which is full of contacts with a range of different opportunities from us, including some of the brands that we let out yesterday. But of course, it's not publicly available information yet because the parties have not entered into any type of agreement, and we're not ready to disclose that. So, unfortunately, I think that's part of the rules and regulations that come with being a listed business, that we're not able to talk freely about the early stage conversations we're having with prospective parties. But shareholders should be confident that there are lots of those happening.